been a couple of buys to come back into play here, and one of them was this buy opportunity just in here. We got a lower low. The value line was bullish on both the Brent and the WTIs at that stage, and it was a nice opportunity to bring a little surprise into that top edge there. The second buy trade should be very, very visible for everybody to see, because there's a very obvious level 2 break just there, and it gave you this perfect opportunity to start snapping up some bids into what looks like a very obvious divergence. The second one was even more obvious. The second one was even more obvious. The only thing that wasn't obvious was whether we were going to run the stops of the 60 liquidity on the way back down again. And on this occasion, we didn't. So if you were waiting for that, you didn't get traded. If you did go step into the crosses and you paid the spreads, then you were able to deal at 60.05s and maybe around about 60.06s. It's traded a high print just now of 60.33s. It's another $250 oil long trade. When it's a good oil long trade, it's just a slow burner in the background that's working for you. Now, obviously, in light of that oil trade that's evolving, you're going to be more inclined to back your ideas about the S&P. Now, as I said, I'm just a little bit concerned about these massive call options that don't seem to be getting an awful lot of activity just yet on the S&P, but slowly grinding. And I think the reason why that's the case is because everybody's been watching, obviously, the NASDAQ. You know, this is what we were talking about earlier. Everybody's been watching the NASDAQ to see whether there was going to be enough buyers that could take the price and hold the 600 level. And it did. It's managed to hold on to the 600 level on the buy side of the book, and they've managed to push it back above to 630. So I think most of the equity traders were waiting to see if these guys were successful in defending the big level on the NASDAQ, one of the big wholesale prices, of course. And they were. So far, so good. The safety is there. But I think that's why we never saw any hedging coming in against those call options, because everybody was waiting to see if they needed to hedge those call options. And as soon as they realize that the S&P, as soon as they realize that the NASDAQ is in relatively good shape, then obviously that's brought the hedgers out to play, hasn't it? And they've came in and they've bought the S&P on the uptick, and that's what we're seeing just now. We're seeing that buyer on the S&P on the uptick. And again, the volatility guys have been right about this trade from the gun, haven't they? We told you the volatility guys have not been at all concerned about these downticks in equities, and we must probably be the only place on the planet that was telling you that the volatility guys were not really that concerned. And sure enough, even on this most recent passage of play, you can see the volatility guys were saying, you know what, I'm even less concerned now, because we've seen the 600 NASDAQ being defended. I'm less concerned now about the price breaking down south as well, and that's exactly what's happened. They've waited and they've waited and they've waited, but every time they've obviously come out, they've pushed the price quite aggressively higher, because we are seeing this call option buying in the background, a total of $4 million off of that down print price. And sure enough, they've done a great job of it actually so far. So it's been good trades, guys. Pretty easy trades, really. But you've just had one eye constantly on the NQ just to make sure it doesn't crack. And so long as it doesn't crack, you just bid into it, and then you're getting those slow, gradual gains away from the bottom print, which is nice. So a couple of nice trades. Not an awful lot of great trades, but a couple of nice trades. I still think real yields have further to go, which I think the big trade is going to be a gold opportunity to maybe buy into if we can get a lower price on this, and maybe take a swing at some business here. But you know, obviously we've got to be concerned about everything else that's going on in the background. But gold buys look reasonable. The reason why we're not taking them yet, and why I said that not yet, is because of what you're seeing on the euro-dollar chart. There's too many buyers on dollar still playing. There's absolutely no way I'm going to start buying gold until this guy shows up in this on this chart here, right? Until the buyers show up in this chart. So gold for me is off the table for the time being until that buyer shows up on the euro dollar. I ain't interested. No siree, Bobby O. Got to put the levels together. We've got to stack it up, guys. Otherwise, you just leave it. Let it be. If you want to add value to your charts, if you want to add order flow to your charts, if you want to add a big block trade to your charts as a scalper, then that's okay. That's go ahead and do it. But from a commercial swing point of view, I don't have a gold buy trade at the present moment. I'm aware of the possibility of a gold buy trade, but that's only if we start seeing some dollar sellers showing up. No, Paul, there hasn't been any. They are absent without leave at the moment. Nobody's wanting to do any business. But remember, in terms of the dollar index is running just a little bit light to the euro dollar just now. So the dollar index hasn't made the break just yet. So, I think if the dollar index makes the break, the dollar index against the euro, for example, is still sitting inside this original bracket here, so it hasn't made the break lower just yet. I think if we get the dollar index making the break, we might start seeing some big old blocks showing up at higher prices, and it's literally touching that level right now, but still nothing. I'll bring it across on the chart so you can see what's diddling at the moment. You can see this is just holding this current price. The level that we're interested in is this level here. And at the moment, you can see just nothing showing into that phase just right now, isn't it? 1555, 1556. And you can see the dollar index just not making enough out of that top edge to give us that bottom edge on the euro dollar that might signal a turning point for gold to rattle back into that as a buy trade. Sellers coming in without a big block trade. That's a pity. That's a pity.